Hello and a warm welcome. You've joined us on Market Cafe right here on ET Now. I'm Ashesha and with me is Kanishka Sarkar, and this is a show where we take you through all the cues that we are getting from the global markets overnight, which are the other stocks that you need to keep on your radar this morning, either based on news or based on brokerage reports, and we will keep you up to speed with everything that's happening globally as well. But let's get started with global market update then. And Kanishka, first up, US markets, how were they? And a lot of development coming in on the tariff war front, isn't it?
That's absolutely right, Ashesha. Very good morning to you, first of all. Now, lots of tariff-related developments coming up overnight. Remember the stock futures, they have been ticking lower after US President Donald Trump announced new duties in 14 countries and extended the reciprocal tariff deadline to August 1st. Now, in regular trading, Wall Street came off a losing session for the major averages. The 30-stock Dow Jones Industrial Average, that tumbled more than 400 points or 0.9%. The S&P 500, that fell 0.8%, whereas the Nasdaq Composite, that also slid almost 1% in trade yesterday. Now, stock slid as investors tracked rapid-fire developments on the trade front. Now, Monday's developments are expected to be the first of several that are likely to come up in this week ahead. Now, Trump has posted more letters yesterday that brought the total number of countries facing those steep tariffs on August 1st to 14. Now, together, the countries hit by these new duties are Bangladesh, Bosnia and Herzegovina, Cambodia, Indonesia, Japan, Laos, Malaysia, Myanmar, Serbia, South Africa, South Korea, Thailand and Tunisia. Meanwhile, remember, Trump has also threatened an additional 10% tariff on countries that align with what he's calling the anti-American policies of the BRICS nations, which include Brazil, Russia, India and China as well. So that's how the global market, US market setup is looking like. But Ashesha, how is the commodity market reacting to these developments?
Well, yes, we haven't seen much reaction in the oil market and in the yellow metal market. But first up, let's talk about Brent crude. We saw a solid 2% uptick in yesterday's trading session. But today, after the recent tariff announcement that came in overnight, Brent crude has started on a slightly negative note, down 0.3% on growth concerns on crude energy demand concerns going forward on account of escalating tariff tensions, and that is the reason it has started nearly 0.25% down. Now remember, it currently trades at nearly $69.3 per barrel. Investors have now turned their attention to the latest developments that have come in on the tariff war front and geopolitical tensions. Although remember, there is a truce between Israel and Iran, there are some kind of disruptions that we are seeing in Red Sea which continue to escalate every single day. So on account of that as well, we are seeing some kind of decline in the oil market, currently sitting with a cut of nearly 0.3%. Shifting focus to the yellow metal market then, gold has started absolutely flat in today's trading session. It is currently trading near that 3,300 about tariff war could lead to increase in safe haven buying for the yellow metal, and that is precisely the reason gold continues to remain in focus. So yes, we haven't seen much action in the commodity market today morning. Brent crude is down 0.3%, but gold is absolutely flat as we speak. Kanishka.
All right, so that's how the commodity market is looking. But let's also shift focus to the Indian markets then. Now, the Lal Street started off the week on a muted note yesterday. Now, broader indices witnessed deeper cuts. Now, let's go across to Snehi to give us a detailed market action roundup from yesterday's trading session.
Well, yes, good morning. Yesterday was an absolutely flat session for us on the benchmarks. We've ended absolutely flat for the Nifty 50. Similar moves coming in for the Sensex, not much happening, although it was Nifty Bank that was quite under pressure. Other than that, the broader market has underperformed the benchmarks in yesterday's trading session. Having said that, here's some benchmark names from the Nifty 50 that did very well yesterday, the likes of HUL, Tata Consumer, Nestle. Remember, you had some very strong updates coming in from the consumption pack, and on the back of that, the rest of the consumption space also did well. These updates came in from Dower, GCPL, but you also had a whole host of other names like HUL, Tata Consumer. All of them were doing well. You also had names like Kotak Mahindra Bank, Asian Paints, Eicher, Geo Financial, ITC that did well from the Nifty 50 group of stocks. But on the flip side, some pressure was built on the Nifty by BEL, Tech Mahindra, ONGC, Ultratech Cement and HCL Tech. But other than that, FMCG, of course, the top shining sector in yesterday's trading session. Nifty Energy very barely has had eked out some gains for itself yesterday, and of course on the back of Petronet LNG, positive note coming in from Motilal Oswal, wherein they upgraded their view on the stock as well as the target price. But barring both of these sectors, everything else ended in the red yesterday. The losses were led largely by Nifty IT, followed by metal, realty, pharma, PSU banks and auto. So that is the pecking order in which the sectors have shut shop yesterday. Now, when we interacted with our technical experts yesterday during closing, here's what they had to say about what to expect for the market session today. Kunal believes that we could see a small gap up of 40-50 points on the Nifty, and he maintains his buy on dip strategy. Aditya Agarwala says that he expects to see an up move, a small gap up open on the Nifty as well. He puts his bets on 25,700 with a stop loss of 25,400. So watch out for these levels in today's trade. But well, yes, that's the roundup of how we have fared yesterday and the levels to watch out for today.
Well, yes, so several stocks and sectors that were in focus in yesterday's trading session, although in the index level, we ended absolutely flat. Snehi, thanks so much for joining us with all those details. But what is the FNO setup looking like? To explain exactly that, we are now joined by Pulkit. Pulkit, good morning. Tell us, what is the FNO setup looking like this morning?
Good morning, Ashesha. So if we talk about the FNO setup after the last trading day, the India VIX is around 12.56, a little bit higher from the previous day, that is 12.32. If we talk about the PCR changes, that is the put call ratio, for Nifty it is around 0.79, comfortable range, no need to worry about it. For Bank Nifty it is 0.94, again in a comfortable range. If we talk about the change in index futures for open interest, that is minus 1.39%, and the trend that was seen was short covering. For most active options, for Nifty, for Nifty call, it was 25,500, and for put, it was 25,400. The trend was for put, it was put writing, and for call, it was call writing. For the highest option open interest, for put, it is 25,000, and for call, it is 26,000. If we talk about the Bank Nifty, the change in open interest for index future is minus 0.08%, and the trend is long unwinding. Since the value is very small, so we can avoid the trend for now. If we talk about the highest option open interest, for both put and call, it is 56,000 only. If we talk about the long positions, so for FI long position, it is 28.3%. For DI, it is 63.2%, and for retail, it is 56.9%. If we talk about FNO ban, only one stock is there, that is RBL Bank. So yesterday we saw that it is consolidating in the range of 100 points, that is 25,400 from 25,500. So if the market is waiting for the queue, so if any queue will come, the option data will change, and we will update you accordingly.
All right, thank you so much, Pulkit, for getting us that F&O snapshot. But let's also take you through all the stocks that are likely to buzz in today's trading session. In fact, we have Abhishek, Varun and Sharad from our research team joining us with a whole host of stocks that we should be watching out for today. Abhishek, let's start with you. Which are the stocks on your radar today?
Yes, first is on the Titan, that Titan has released its quarter one updates. Broadly, most of its segments have reported double-digit kind of a growth, but consumer sentiments have been weak in the quarter, given that the kind of a volatility in the gold prices. Further, a downtrend in the overall purchase has been visible as per the management, that the preference for the lower carat product has been increasing, and I think that given the kind of the gold price trend, this trend would continue, and with that the probable stock reaction is expected to be mixed bag. Second Tata Group company, Tata Motors. In the case of Tata Motors, JLR has reported its volume figures for Q1 FY26. Broadly, the numbers have been down by 10% on the YY basis, but it's in line with the street expectation, given the kind of a geopolitical issues that we have seen in the Q1. On a mix wise, broadly the geography wise mix was quite stable, given that the cumulative volume share from US and China was continued to be at around 45%. High value products have contributed roughly 77% to its volume. No major surprises expected in its Q1 result. The stock price is likely to remain in range bound in the near term till some kind of a clarity emerge from the deal between Europe and USA. Third is on the Macrotech developers. So Macrotech has also released its Q1 updates. Pre-sales has increased by 10% YY, and collection has also increased by 7%. Further, the company has added 5 new projects with a GDV of roughly 22,700 crore. Earlier, management has guided for pre-sales of roughly 21,000 crore in FY26 and business development of roughly 25,000 crore. With this Q1 performance, it has almost achieved 90% of its business development target for FY26. Directionally positive for Macrotech.
Okay, so several stocks in focus based on several updates that have come in for the quarter gone by. But Varun, coming to you then, several of these banking stocks will also be in focus on the back of the same reason. Tell us more.
So Kotak Mahindra Bank has given its operational update, the provisional operational update for Q1, and it's a little bit mixed because the total deposit there have gone up by around 14.6% on a YOY basis. On a quarter-on-quarter basis, they are up by around 2.8%. The CASA has gone up by around 7.9% on a YOY basis, but on a quarter-on-quarter basis, it's down by around 2.2%. And the net advances they are up by around 14% on a YOY basis, and on a quarter-on-quarter basis, if you look, they are up by around 4%. So the overall growth has been good, but yes, they have been less than what the company used to deliver, in the past quarters. But looking at the given context of the industry currently, the numbers look mixed. Now let me speak about Utkarsh Small Finance Bank, because the company has received no adverse observations from BSE Limited and no objection from NSE for the scheme of amalgamation of Utkarsh Core Invest Limited with Utkarsh Small Finance Bank. So keep an eye on this bank today. Also keep an eye on oil and gas stocks, because what we learn from our sources that there is a big relief coming for foreign investors in the oil and gas sector, because government may provide compensation for foreign companies if their leases or contract are cancelled by the central or the state government. So keep an eye on the overall oil and gas sector as well.
All right, thank you so much, Varun. So we'll be watching out for those banking and oil and gas names as well. But Sharad, several infra and AMC names on your list. Why are they in focus?
In focus is JSW Infra, and a positive news flow coming in as the company has received a letter of award from the Syama Prasad Mukherjee Port Authority, and this is coming in for Netaji Subhas Dock in Kolkata, and that's worth roughly 740 odd crore rupees. Also up next, Navin Fluorine, they have opened their almost 750 crore QIP. Also the floor price coming in at 4,798 rupees per share. That's roughly 5% discretionary discount coming in on the floor price as well. Also AMC stocks would be in focus. They would be in positive light as SEBI has proposed to ease the business activity regulations on AMCs under the mutual fund regulations. Lastly, SRF would be in focus. Annual report has come out and a very bullish commentary coming from management for FY26, and they've stated two important things. Company will be focusing on both greenfield and brownfield expansions, and also interestingly, its debottlenecking projects over the past 18 months have resulted in increased in chemical businesses overall capacity by 30% odd.
Sharad, Abhishek and Varun, thanks so much for joining us with all those details. So those are the list of stocks that you need to keep an eye out on in today's trading session. But which are the other important cues and events that you should keep on your radar? Snehi is now joining us with exactly that. Snehi, over to you.
Well, yes, lots of cues to watch out for. Not much happening on the macroeconomic front back home. But from Japan, we have current account data. Those numbers will come out, so watch out for that. In terms of corporate action and board meetings back home, you will have JSW Steel and Titan in focus, because those stocks will be trading ex-dividend. And it's going to be the last day to buy the shares of Emphasis in order to be eligible for their dividend to meet that record date requirement. In terms of annual general meetings, Voltas will be in focus, so watch out for if any important commentary is something that we can see from this AGM. And in terms of other events, you have French President Emmanuel Macron and UK Prime Minister Keir Starmer. They will be co-chairing the 37th Franco-British Summit, so watch out for this. And ASEAN foreign ministers will be meeting in Kuala Lumpur, so watch out for all of these cues very closely.
Host of events that you need to keep your eye out on. Snehi, thanks so much for joining us with all those details. But let's have a look at how Asian markets have opened this morning, and Japanese market have started on a positive note. Nikkei is now up to 0.1% as we speak, up nearly 41 points. Korean market, Kospi is up 1.5%. We have ASX 200, which is absolutely flat as we speak. ASX 200 should come up for you on your screen, absolutely flat. Shanghai Composite, that one is up 0.2%, 3479 is where it is currently trading. Chinese markets have also started rather positive, flat with a positive bias. So CSI 300 index is up 0.2%, and Hang Seng index has also opened positively. So largely a mixed bag, but on the positive side. Nifty implied open is testing a negative start for the Indian markets. It's now down 45 points as we speak, 0.2% lower for Nifty implied open after an absolutely flat ending that we had for the Indian markets yesterday. So Kanishka, for the Asian markets, we are not getting any major cues as such. The GIFT Nifty is now down 45 points as we speak.
That's right. So those are the cues that we are tracking from Asian markets. Rather muted trend from the Asian market, but let's also shift focus to what the market regulator is saying. Now, SEBI has sounded the alarm on soaring retail losses in equity derivatives once again. A fresh analysis of the October 2024 reform shows that 91% of individual traders in the equity derivatives market posted net losses in FY25 that total to a record 1.05 lakh crore rupees, up 41% from last year. Now, this average loss per trader also jumped to 1.1 lakh rupees. Now, while index options turnover that fell 9% on a year-on-year basis in premium terms, it remains sharply higher than 2 years ago. SEBI says that the trends confirm a worrying rise in risky retail speculation, with India still seeing unusually high options trading compared to the global market. Now, the regulator's May 2025 circular aims to tighten risk monitoring and improve disclosures to protect investors from steep losses. Now, SEBI has reaffirmed that it's keeping index options turnover under constant review and called for greater retail caution in complex derivative products. In fact, Ankur is joining us with all the details there.
Yes, SEBI has been taken initiatives regarding FNO in the recent past, and especially in October 2024, there were framework which was issued by the market regulator in order to protect the retail investors as far as the covering the froth in the market, which was reported as per the market participants. So for those actions, now SEBI has done a study whether or not that initiative has yielded any kind of result. So the study has found that index options turnover YOY is down 9% in premium terms, and compared to 2 years ago, index options is up 14%. I repeat, it is up 14%, but that should be seen in the context of the fact that the trading in options per se has been increasing year on year. Now, also the data says that turnover of individuals in premium segment in equity derivative segment is down 11% YOY and up 36% if you talk again 2 years back. This data says that even at this time period, it is actually up 36% if you compare with the last 2 years. SEBI want to say that even though there is some impact on options volume, but it is not so if you compare it with the data of 2 years. But more interestingly, there is a data which has been presented by SEBI regarding the losses. How much is the actual loss which is made by the individuals? Now, for that, in FY25, the total loss, and I quote here, it is 1,10,000 crore which has been made by individuals in options. There was a study earlier which was saying that over 90% of individuals are making losses, and even in FY25, I repeat, 91% of the people has actually made losses. In FY24, it was 91.1, in FY23, it was 91.7, and in FY22, it was 90.2%. So 4 years in a row, individuals are making losses in this segment.
So individuals continue to make losses in the futures and options segment. But Ankur, if you can elaborate this more for us, does this mean SEBI measures didn't work in the way they had planned? What does this really mean?
No, it should be looked into the perspective what is the idea of SEBI. SEBI doesn't want to curb F&O market. SEBI doesn't want to curb the genuine investors who are there in futures and options, but the froth, but the artificial activities, and that is why you would have seen the Jane Street order which has been issued by SEBI. If there is any market manipulation, SEBI is going after that. Now with these findings, SEBI wants to put forward the facts that many of the people, individuals in the market participants were saying that the volumes are down 30 to 40%, but SEBI is now putting into perspective two things. If you compare with 2 years, the premium has actually gone up, the volume has actually gone up, but yes, if you compare with last 6 months, the action which has been taken by SEBI, there is some deterioration in terms of volume, but that is not to the extent which has been gauged or presented by the market participant. So SEBI is now presenting facts. Now as far as losses by individuals are concerned, SEBI has already warned against it, and even the recent study finds that yes, investors, retail investors are making losses, especially in options.
Kind of commentary that we have seen coming from SEBI, would you say that Indians are still addicted to the F&O market?
So SEBI is very case specific in terms of action which it wants to take. Remember, SEBI chairman has already stated that the investigation by SEBI will continue in any of the entities where there is a wrongdoing find, where there is a market manipulation. So those kind of activities will continue. Even in the Jane Street manner, we have earlier reported that the scope of investigation will increase. So protection of retail investor is the paramount importance fact for market regulator. What it is trying to do, on one hand it is taking action, on another hand it is presenting facts to investors so that they know what is the reality which is happening in options, so that they take an informed decision of investing in F&O. But there is no window, there is no roadblock from a market regulator that you should not enter F&O market, but you should have an informed choice there.
Ankur, thank you so much for taking your time out and explaining in detail the entire concept related to what the F&O and SEBI guidelines really indicate. We need to slip into a very short break, but we'll be joined by a global guest to understand the macro setup, the tariff deadline that has come in. Arvind Sanger will be joining us on the other side of the break. Stay tuned. Welcome back. You're still tuned into Market Cafe right here on ET Now. And to understand the entire tariff saga and what this means for global markets, we are now joined by Mr. Arvind Sanger, Managing Partner at Geosphere Capital Management, now joining us. Mr. Sanger, thank you so much for taking your time out and joining us here on ET Now. Lots of developments overnight. US President Donald Trump has now slapped tariffs ranging anywhere between 25 to 40% on several countries globally. Also, there's an important statement which he has made where he says that we are close to making a deal with India. How do you read this, and what does this mean for Indian markets and global markets?
Well, clearly the US markets were off a little bit today because of this news about new round of tariffs, or reinstatement of the old tariffs in some countries. Luckily, they stand till August 1, so the markets didn't fall too badly. They fell, a little bit, 70 bips, 70 basis points in the US S&P 500. But I think from an Indian market standpoint, it is good news. I think it's now the second or third time in the last few days that President Trump has tweeted that a deal with India is closed. So hopefully there is some common ground quickly found, and India becomes, there's been a couple of countries that have signed deals. Again, these are all not very detailed, but broad outlines. UK has signed one a few weeks ago, and then last week, I think it was Vietnam that signed a deal, and now India seems to be lining up. And I think it'll be good. It'll remove some of the uncertainty, but the reality is with President Trump, nothing seems to be permanent. And even if India signs a deal now, who knows what might come up in the future. But I think getting some reasonable the framework is clearly going to be a relief for the Indian market, because unpredictability is worse than predictability, even if the predictability means a little more tariffs. And frankly, India, opening up its economy in some sectors which it may not have been willing to otherwise, is, I think, long term very good for the Indian economy's health in terms of making it more, more competitive and more open.
That's right. Hi, Mr. Sanger. This is Kanishka also joining in. A very good morning to you. Now, with these reciprocal tariff deadline, it's now been extended to August 1st, right, for implementation. What do you feel are the chances that it may be walked back or negotiated again before implementation? Because yet again, the deadline has been pushed, and just like you were mentioning, nothing is really permanent with the US president.
Yeah, I mean, I think there's no question in my mind that President Trump does not want the kind of tariff turmoil that we saw after the early April 2nd, I think it was announcement. So clearly, there is no desire to have that kind of uncertainty and market turmoil and economic risk. So I think what President Trump is doing is trying to put some numbers out there to, as they say, focus the mind of some of these countries like Korea and Japan, to name the two most prominent ones of the ones named in today's set of new tariffs announced. And so, if that helps to focus the minds of both sides to try to get a deal, there's some time. But my sense is what President Trump and his team are realizing is that it's easy to announce these big negotiations, but these negotiations are tough, and there's a reason why trade talks take years, and these guys are trying to compress it in weeks. I wouldn't count on August 1 as the last final chance. Maybe it is, but maybe it's not. So far, as we've discovered from the taco name that Trump has been given, I don't think he's interested in causing huge economic turmoil. Short term, a little bit is okay, but I think he's now looking for deals.
As far as the tariff deadline is concerned, and you're saying that perhaps August 1 could not be the last deadline, but what kind of impact will this have over the next 1 month on both American markets as well as Indian markets? Yesterday we reacted negatively, but as you mentioned, it could have been worse had the deadline not been extended till August 1. But now going forward for the next 1 month, or at least till the 1st of August, what kind of course will US markets and back home Indian markets follow for the next few days?
Well, assuming that there are deals coming from India and maybe EU and maybe a couple of other countries, then I think the US markets should settle down and not be too unsettled. But if these promised deals keep getting pushed and pushed to the right, and the fear grows that who knows, what's coming, then the markets could remain unsettled. My hope and assumption is that India and maybe EU are on track to do deals in the near future, in the next few days, hopefully by the end of the week. And if that happens, then the Indian markets, to be more specific about the Indian markets, should do fine. I think the focus really, tariffs is in my opinion, a sideshow. Once we get whatever the tariffs are, some deal on the table, the real issue for the Indian markets is going to be the monsoons are fine. But the economic fundamentals, whether it's auto sales growth or other short duration factors that we look at, the data is not extremely encouraging in terms of a strong earnings quarter ahead of us. So I think that the earnings will and the commentary from the corporates will be determining, more importantly, in my opinion, as to what Indian markets do in the coming weeks, rather than the tariff news ebb and flow.
That's right. So apart from the tariff deadline and the news flow on tariffs, we'll be tracking earnings and the management commentary going forward for the cues for the Indian and global markets. But on that note, Mr. Sanger, we'll let you go. Thank you so much for joining us this morning. Great chatting with you.
Thank you.
All right, then moving on, just as we were talking about tariffs, now Donald Trump, he seems to be backing down from his stuffed tariff stance. Now, an executive order delays the tariff imposition to August 1st, just like we mentioned, giving targeted nations weeks to respond. Now, from next month, the US is saying that new tariff rates will be applicable on imports from at least 14 countries, including major Asian economies like Japan, South Korea, Malaysia, and Thailand. Now, tariff rates will range from 25% all the way up to 40%, depending on the country, with the highest duties hitting imports from Laos and Myanmar. Now, Trump has posted signed letters on social media outlining these new rates, saying adjustments might be considered based on bilateral ties. However, it is unclear if the base tariffs of 10% remain.
Tensions flared at the BRICS summit in Rio after Trump threatened extra tariffs on the bloc, calling them anti-American. But Brazilian President Lula pushed back hard, declaring the world has changed. We don't want an emperor. Trump has threatened an additional 10% tariff on BRICS countries, though he stopped short of immediate action, warning he'd proceed if their policies undermine US interests. Lula defended BRICS as a force for economic alternatives and reiterated his call to reduce dependence on the US dollar in global trade. Other BRICS leaders echoed after a softer tone. South Africa stressed no intention to compete with the US. China called for a win-win cooperation, and Russia insisted that the bloc is not aimed against any country. Meanwhile, Indonesia and Malaysia moved to reassure Washington of their independent economic stances as trade talks continue. The European Union has sidestepped in the latest round of US tariff letters for now. Reports say that the bloc won't receive a formal letter from US President Donald Trump threatening higher tariffs like those sent to Japan and other trading partners. Instead, Brussels is quietly negotiating possible concessions to secure exemptions from Trump's baseline 10% levy. Talks may also include limited US tariff cuts on European aircraft parts, spirits, and medical equipment, plus a potential agreement benefiting German automakers by allowing more EU car imports at lower rates. The European Commission also warned member states that may need to accept an unbalanced deal to avoid further uncertainty.
Next up, White House trade advisor Peter Navarro has launched a sharp attack on Fed Chair Jerome Powell, accusing him of inflicting, and I quote, serious economic damage by holding interest rates steady. In a Substack post, Navarro urged the Federal Reserve Board to intervene directly, claiming Powell's stance is hurting federal revenues, deepening deficits, and worsening America's debt load. He argued that Americans are feeling acute financial pain through higher interest payments and slower growth, and warned that if Powell won't change course voluntarily, the board must act to force a pivot. Benjamin Netanyahu met Donald Trump at the White House as Israel and Hamas continued indirect talks on a possible US-brokered Gaza ceasefire and hostage deal. Trump hinted a Gaza ceasefire could be clinched this week, leveraging weakened Iranian influence on Hamas. Netanyahu said the discussions would also cover normalization prospects with Arab neighbors like Saudi Arabia, Lebanon, and Syria. Meanwhile, US envoy will travel to Qatar for a second round of talks, but major hurdles remain, particularly over humanitarian aid access to Gaza, which Israel fears could benefit Hamas militants.
Samsung is bracing for a major earnings hit. The company expects second quarter profits to more than halve as it struggles to ride the booming AI wave. Projected operating profit is set to plunge to 10.4 trillion, missing analyst expectations and signaling a deeper slump than feared. Revenue is also forecast to come in at 74 trillion won, falling short of estimate. A key setback is for the giant, falling behind rivals like SK Hynix and Micron in high bandwidth memory chips. And Texas is reeling after catastrophic flash floods killed more than 100 people over the 4th of July weekend, with many more still missing, including children at a summer camp. The devastation hit Kerr County and the Texas Hill Country especially hard as a massive storm dropped 12 inches of rain overnight, causing the Guadalupe River to surge 26 feet in just 45 minutes. The region is notoriously flood-prone and questions are mounting over early warnings and emergency preparedness. The National Weather Service had issued urgent alerts, but the sheer speed and scale of the flooding caught many off guard. And deadly anti-government protests also rocked Kenya, leaving at least 11 people dead and dozens injured as police opened fire to disperse crowds in Nairobi and other cities. The demonstration also marked the 35th anniversary of Kenya's pro-democracy rallies and were fueled by the fresh outrage over the recent death of blogger Albert Ojwang in police custody. The protests, initially sparked by tax hikes last year, have broadened into a wider movement against corruption, police brutality and disappearances of government critics. Kenya's Interior Ministry has also branded the protest terrorism, while rights group accuse security forces of using excessive and lethal force.
All right, on to some national updates then. Prime Minister Narendra Modi arrived in Brasilia after wrapping up a very productive Rio de Janeiro trip for 17th BRICS Summit. He received very warm welcome upon landing in the Brazilian capital for a state visit and received by Brazilian Defense Minister. Over a decade after the amendment, Maharashtra opens doors for homeopaths. The state's medical council now allows homeopathic practitioners to prescribe allopathic medicines if they complete a 6-month pharmacology certification.
Police and maritime security agencies have intensified their search for a suspicious boat, possibly a Pakistani fishing vessel, spotted near Revdanda coast in Maharashtra's Raigad district, officials said. The boat was spotted on Indian Navy's radar on Sunday night, around 2 nautical miles off the Korlai coast in Revdanda. And
with that, we'll take a very short break on this edition of Market Cafe, but we'll be right back with more news and updates on the other side.
The mutual fund regulations. AMCs may be allowed to manage pooled non-broad-based funds. My colleague Anurag Joshi is here with more details on what this means for the entire mutual fund industry. Anurag, over to you.
Markets regulator Securities and Exchange Board of India has floated a consultation paper which significantly proposes that of easing of business activity restrictions on asset management companies. Now, one of the key takeaways of this consultation paper is that SEBI is proposing that the portfolio management services and mutual fund services of financial firms should be segregated. Now, according to the paper, the AMCs may be allowed to manage pooled non-broad-based funds under strict guidelines, and SEBI has mooted the removal of broad-basing requirements of pooled asset advisory. This follows concerns having been raised about conflicts of interest due to differential fees and resource diversion. The proposal also includes caps on fee differentials between mutual funds and non-broad-based funds. The AMCs may be barred from charging performance-linked fees for non-broad-based funds, and the AMCs have to disclose the performance of pooled non-broad-based funds vis-a-vis the mutual fund schemes. SEBI is proposing that segregation of fund managers if the portfolio overlap is below 70%, and the Unit Holder Protection Committee will oversee the fee structure and the resource allocation. The AMCs are to maintain trade policies to prevent front-running and misusing of the insider information, and SEBI has suggested a ban on the transfer of securities between pooled and mutual fund plans. The other highlights of the consultation papers include the AMCs will need to ring-fence operations to prevent a conflict of interest.
All right, thank you so much, Anurag, for getting us all the latest details on SEBI's AMC norms. But moving on, big relief is likely on the cards of foreign investors in the oil and gas sector. Prakash Priyadarshi gets us more details on this exclusive story.
There are very significant development coming in as the government is likely to provide big relief to foreign investors in the oil and gas sector. We are given to understand that the government may provide compensation to foreign companies if their lease or contract is cancelled by the central or state government. In fact, compensation may be provided to companies deprived of ownership. While Ministry has issued a model draft revenue sharing contract between the government and companies where feedback has been short from the industry. Compensation will be provided if a contractor is substantially or permanently deprived of ownership of an oil exploration block. A very crucial development coming in as this provision is being introduced by the government for the first time, which is very crucial, especially at a time where government is struggling to get investment in the oil and gas sector amid complex geopolitical situation. As per the provision, companies shall be paid an amount equal to the sum total of all costs and expenditure incurred on oil exploration. In addition to that, government has made a provision to allow foreign arbitration for domestic oil and gas companies, especially in a case where foreign partner holds 51% stake in the joint venture.
Thanks so much for joining us with all those details. But shifting focus to some operational updates then, Titan delivered a mixed performance in the first quarter of FY26 with strong growth in watches, fragrances and international markets offsetting softness in core jewelry segment due to gold price volatility. My colleague Snehi Shah is now joining us with more details on exactly this. Snehi, over to you.
Well, as if you take a look at Titan's Q1 FY26 update, I would say it's a mixed set of numbers coming in, and I say mixed because the other segments, segments barring jewelry, have done very well on a year-on-year and a sequential basis, but it's actually jewelry that makes up the biggest part of the business that has lagged slightly on a sequential basis. First, if you take a look at the overall numbers, for the consumer business, growth has come in at 20%. That's slightly lower than what we had seen last quarter with 10 store additions. For domestic business, growth has come in at 19% on a year-on-year basis, still lower on a sequential basis with a net store addition of 9 stores. But if you take a look at how the jewelry business has done, a lot of consumption sentiment has been hit by the gold price volatility that we have seen in the quarter gone by. Buyer growth has been flat for Tanishq, Mia, Zoya as well as Carat Lane, and customers have preferred lightweight gold and low carated jewelry. That has affected the margins of the overall jewelry business. Studded ratio is also lower on a year-on-year basis, and Tanishq, Mia and Zoya are likely to collectively grow 17%, and Carat Lane is expected to grow 38% on a year-on-year basis. So good growth coming in for Carat Lane. Like-to-like growth in TMZ is early double digits, and the same for Carat Lane is in healthy double digits. Moving away from that, watches have done very well. Overall growth of 23% on a year-on-year basis, led by analog, both house brands as well as international. Eye care has also done well, overall growth of 12% year-on-year. Emerging business this time has given a very positive surprise. Fragrances are up 56%, women's bags are up 61%, and surprisingly, Taneira has this time logged a positive growth of 15% on a year-on-year basis. So overall emerging business growth of 36%, and international business is also up 49% on a year-on-year basis. So other than jewelry and overall revenue that was slightly lower, overall business has, in terms of other segments, have done really well for Titan. So overall, we would say it's a mixed set of Q1 updates for Titan.
All right, thank you so much, Snehi. So mixed set of numbers coming in for Titan, but moving on to another Tata Group company and keeping it with Q1 updates. Now, Tata Motors JLR has reported an inline set with the luxury vehicle arm dropping 11% wholesale sales in Q1. Srishti is joining us with all the details. Srishti, over to you.
Out with its Q1 update, wherein this time around we have seen a significant drop on their wholesale as well as retail sales data, both on a YOY as well as sequential basis, wherein the wholesale sales has come in at over 87,000 units, while the retail sales have declined 15% on a YOY basis at 94,420 odd units. But these numbers are actually in line with the analyst estimates as well, because the reason for this particular decline is already what they were actually factoring in. The decline reflects the planned wind down of the legacy Jaguar model and a pause in the shipments to the US during April 2025 as well, following the introduction of the US tariff imports. Other than that, the UK was most impacted due to the Jaguar model rundown. So these are the factors that actually impacted Tata Motors JLR performance in the quarter gone by. And along with that, if you look at the geographical performance this time around, then the major decline was seen in the North America market, European market, and even the UK market have seen a decline of 26% in their sales data on a YY basis. But on the flip side, the markets that did very well for Tata Motors was actually MENA, overseas as well as China market. There was an improvement of 1%, and the China has witnessed a marginal improvement in comparison to the double-digit decline that we have already seen in the last 2 quarters. So the pressure over there is actually subsiding a bit, is what the numbers are telling us. So for now, the wholesales data as well as the retails data for Tata Motors has come in line with the analyst estimate.
So as far as Tata Motors JLR sales and production number is concerned, but shifting focus from the auto sector to the insurance sector then, and let's now have a look at June general insurance data, and the industry GDPI growth has moderated to 5.6% on a year-on-year basis. My colleague Varun Dubey is now joining us with a roundup of the insurance data put together by Nuvama. Varun, over to you.
Well, definitely. So the gross direct premium income for the overall industry has shown a moderate increase of around 5.6% on a year-on-year basis in the month of June. And also the standalone products that has expanded by around 10.5% on a YOY basis. Now it's the public sector companies which have actually outperformed the private sector companies in the month of June. If you look at the overall growth, overall GDPI growth for multi-insurance private companies, that has shown a decline of around 0.3% on a YOY basis, but for the public sector companies, it is up by around 15.4% on a YOY basis. So the market continues to face aggression from the public sector companies more than the private sector companies. Also, if you look at the market share for the public sector companies, especially in SAHI, that has increased by around 181 basis point for the overall, and for SAHI, it has increased by around 15 basis point at the expense of the private companies, wherein they have seen a decline of around 177 basis point to around 52.9%. Now, if you look at company specific, Bajaj Allianz General Insurance, the overall GDPI has expanded by around 17.1%, although the market share has also improved by 3 basis point to around 6.5%. ICICI Lombard, that has seen a sharp decline of around 10.4% on a YOY basis, and also the market share has declined by around 82 basis point. For New India Assurance, the overall growth has been 10.7%, and for Star Health, the premium has shown a growth of around 2.9% on a YOY basis, although it has underperformed its peer group companies. So if you look at the total industry, the overall growth has moderated to around 5.6%, but the public sector companies have actually outperformed the private sector companies.
So insurance stocks in focus on the back of that, but let's have a look at how Asian markets have begun this morning. GIFT Nifty is indicating a rather muted start. GIFT Nifty is now down nearly 50 points, but Japanese market Nikkei has opened on a positive note, up 0.2%, 90 points higher for Nikkei. We have Kospi, which is up 0.6%. Hang Seng, that is Hong Kong market, is also up nearly 100 points, 0.4% higher for the Hang Seng index. Shanghai is also up marginally though, up 0.2% as we speak. ASX 200 though is absolutely flat, doing nothing at the moment, but GIFT Nifty, as I mentioned, is indicating a flat to negative start for the Indian markets. 25,488 is where Nifty implied open is currently trading. Kanishka.
That's right. A flat to negative start is what we are penciling in for the Indian market. But going forward in the day, we have a stellar lineup coming up for our viewers. To discuss the whole tariff saga in detail, we have Hugh Johnson, the chairman and chief economist at Hugh Johnson Economics, New York, joining us to discuss the entire tariff tantrum in detail. Next up, we'll have Nitin Bhasin, who's the head of institutional equities at Ambit Capital, to discuss what to make of what to expect from the upcoming earnings season, and that will be followed by Sunil Subramanian, who will join us to discuss in detail SEBI's F&O latest circular. After that, we'll have Q1 updates that have been coming in on NBFCs and the banking space, and to discuss that in detail and what to make of that, we'll have Bayanan Vaidya, the research analyst at BFSI Access Securities, and Shweta Daptardar, vice president lead analyst of Diversified Financials at Elara Capital, joining us on the show on what to make of the banking and NBFC space going forward. There's a stellar lineup coming up next on the market, and on that note, we'll wrap this edition of Market Cafe. But stay tuned as we have a very good lineup coming up next on the show. देश